Hey, it's Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty. You may have heard about our full-service flat fee listings through a postcard in your mailbox recently. We'll talk more about those in just a second, but first we'll look at the Cincinnati real estate market news for the first week of 2024 and compare those numbers to the first week of 2023. First of all, new listings are unchanged. Closings are down 26%. Median sales price is up 4%. Median days on market is at 12 days. Total inventory right now is at 72 days, while active inventory is at 40 days. It is still a seller's market, but not as hot as it was last spring. So if you want to net the most money when you sell your home, you need a more sophisticated marketing approach, but you don't have to pay a 6% commission to get that because it comes standard with our full service flat fee listings. Visit our site at 513flatfee.com to learn more about our service and to find out how you can net the most money when you sell your home. Interest rates have been a very hot topic in the real estate market this past year. I expect that to continue throughout this next year. I'm keeping a close eye on the average mortgage interest rates for you to keep you informed about what's going on and what's to come here in the Cincinnati real estate market, what we can expect to happen in response to what's happening with interest rates. Right now, Fannie Mae has the average fixed rate mortgage for a 30-year loan, the rate at 6.66% on average. That's up a little bit, very slightly, like 0.04% compared to last week. It's about 1/3% higher than it was last year. It's down from a peak of 7.79% at the peak of rates in October of 2023, just a few months ago. Many economists have predicted that there will be 3 to 4 interest rate cuts by the Federal Reserve in 2024, based on the fact that the inflation right now, according to the most recent government report, is at 3.1%. It's not quite at 2%, which was the Federal Reserve's stated goal. The purpose for them to raise rates last year was to get inflation down to 2%. We're not there yet. Of course, we all know that we're experiencing prices much higher than 3.1% when we buy gas, groceries, or anything else right now. But based on the government's numbers, they're still not at the target rate of 2% for inflation. I don't see any reason why the Federal Reserve would be cutting interest rates until they get down to that target, unless they've lost hope in their ability to get that inflation number down to 2%. So I'll keep a tabs on that for you, keep an eye on things. Right now, we expect that if interest rates continue to decline in 2024, we'll see more buyers enter the market, which will result in more competition among buyers. It'll make buyers have a harder time finding what they're looking for, getting it under contract, and make them have less leverage in negotiations with sellers, so more of a stronger seller's market if interest rates decline. Regarding inventory, the general consensus among real estate professionals here in Cincinnati is we don't really expect there to be any huge influx of new inventory from any particular source. We don't expect a bunch of foreclosures or short sales or a bunch of investors divesting of their real estate portfolios or anything like that. Of course, new construction from builders is always a factor, but we don't see any huge spike in housing starts to suggest that we're going to have a huge influx of inventory. We do expect a lot of buyers, if interest rates go down, to come to market like I mentioned. Some of those will be selling a house as well. So although they're buying a house, they're also adding inventory to the market by selling a house as well. That's a net zero for inventory. It doesn't increase as they're buying one and selling one. We do expect renters who have been on the sidelines waiting for an opportunity to buy, and they haven't bought yet because of interest rates being too high for them. We expect some of them to enter the market, and they'll take a listing off the market, but they won't be adding one because if they don't own a home, obviously they can't sell one. So we do expect that inventory will remain pretty stable here, maybe even decrease a little bit, which is going to make the market even stronger for sellers and more difficult for buyers. If you're thinking about selling your home and you're in the process of doing that, you can expect, if interest rates continue to decline, more showings, more offers, it being more likely that you'll be in a multiple offer situation where you have to be careful to leverage all potential buyers' interest in your property to make sure that you get the best price and terms for the sale of your home. Again, we don't know what the future holds with interest rates. I think it's going to be maybe a small decline, maybe down to the 6.25% range by the end of the year. Other economists and real estate agents and professionals have predicted that we may get down to the low 6s or high 5s. If that happens, again, what I've mentioned here before is going to be even more of an extreme change to the market. But overall, we all kind of agree that it's going to be a seller's market. It's just a matter of how strong it is for sellers, how difficult it is for buyers. But if you have any questions about how to navigate the real estate market in 2024, whether you're buying a home, selling a home, or possibly doing both, feel free to reach out to me. I'd be happy to help any way I can to answer questions you have. The best way to get in touch with me and my team is to visit our site at 513flatfee.com. Click one of the links there to schedule the call so we can set aside some time to assess your real estate needs, and we can map out a game plan for you on how we can help you to achieve your real estate goals. I'm Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty.